Top 5 stocks you have to buy now. So guys, the first stock today is going to be NIU, and it's currently at a price of $25. So basically this company is electric scooter company, which mainly focuses just on electric scooters, and it's a worldwide brand. For me, I live in Amsterdam, so in Europe, the main market is in Europe for now, as you can see, and a bit of China, and they're moving now into the US as well, and Canada. So one by one, especially because of the bans of diesel vehicles and everything, so they're gonna have to cancel, especially in Europe, because Europe is a culture of scooter using company, especially Holland, especially Amsterdam. And Amsterdam, for example, they want to ban all diesel and petrol cars starting from 2025, so in 4 years' time. So all the scooters, the old scooter, diesel scooters, are going to be banned. So what is there to substitute with is electric scooters, for example, which is new. New currently, for me, walking the streets and all of this, I see a lot of new scooters currently being used by a lot of, especially the youth, you know. And it's a good way of transportation in Holland. They as well do kind of a program of what's called sharing scooters. So what they do is basically, I don't know if you guys know about Felix, which is kind of a rental scooter company, which you can download the app on the phone. It's called Felix, or Check, or other applications. And basically it's a fleet. They hire a fleet and they have their own software developing for, you can basically like a car online. You just make an app, you scan the phone, you put in your details, your ID and everything, and then you go wherever you find the scooter of location, you can unlock it by using your phone, and you pay per minute, and 1 minute costs around 18 cents per minute. So, and then you can cruise around the city. It's pretty handy, and I think it's now mainly being used in Europe, only Italy, Germany, and all of these places. I don't know if you ever been to Paris or something. You can see these scooters where you had to, back in the days, where you had to put your foot on the floor and keep pushing them, like Lime Company, and it's the same concept basically, which is pretty. See here, this is one of the people who are using their fleets. Go Urban, which is in Italy. Sharing scooters in Holland, everything. Flying Bird is in Belgium. All of basically the main market for them is Europe for now. So it's at $25 currently. It was a peak of $53, $53 exactly, with a market cap of 1.9 billion and a PA ratio of 58, which is quite high. But probably in the future it will have a much better PA ratio for now. Probably the earnings aren't as good as expected, and they have now a EPS, shares per price, earnings per share ratio, at 0.3, 50 cents basically. Each earnings is 50 cents, which is quite good. Not bad. Let's check out the statistics. Here the forward PA ratio is at 24, which is pretty good. And PA ratio for growth for the next 5 years, it's 44. Price per sales ratio is 0.6, which is fantastic basically. It's really a good number. And the price per book is 1.7, good as well. Enterprise value versus revenue 0.3. Let's check their profile to see who is the manager, how many employees they have. They have now currently 623 employees, and they're based in Beijing, China. They don't have any data of how much they earn and everything of their CEOs. But you can, if you really want to do a more deep research, you can just copy paste the CEO and all these high executive employees, and check out, make a deep research about studying what they had, how they talk, how everything, to get a more better feeling about their management team and where they're going. Let's check their finance then. Okay, sorry for because on the phone it's quite a bit small, but when you open it on the laptop you can easily see all of these numbers next to each other. So their revenue currently is at 3 million. Okay, and if we check the numbers next to it, okay, it's 1.5. It's getting, they basically are making much more progress. Only in 2019 and 20, because of COVID, probably they didn't have a lot of sales, so it's understandable. And the cost of revenue is getting higher, so they're probably paying something too much or innovation or something. Gross profit is getting higher and higher each time. Okay. Operation expenses, yeah, they're spending more on research and developing, selling and administration. Okay. What else? The most important thing here is for me to look at the total revenue, gross profit, how much they cost to make the revenue, research and development, if they are developing it in themselves or not. Mainly everything is important, but these for me are most important. Total expenses, basic EPS. What else? ADMA, okay. EBITDA, I mean. My bad for the spelling. Yeah, and then check out the earnings. How did they do last time? If they were in loss or not. They beat earnings last time, Q1. Usually what this company, the main profit comes in is mainly in summer seasons. So Q2, 3, and sometimes 4 comes the main earnings, because that's when usually people, when they go out in summer, that's when they ride scooters. No one buys a scooter in winter. Usually always the scooter market, because here in Europe it rains a lot, so no one usually rides a scooter as much as in summer. So it's understandable from the market side. And they've been basically profitable from 2019, earnings basically. And so far so good. Let's check out the balance sheet, see the numbers, how much assets and debts they have, so we can get a better feeling about it, and how much cash later. Okay, the total assets of 1.8 million is getting higher. Okay, the most important thing is the assets, and the total debt, how much debt they have, 170. Okay, as we can see here from, okay, they've been paying off their debts, and yeah, it's for 180,000 is good, better than last year and the years before. So basically it means they're paying off their debt and everything. And okay, we can see how much cash they have currently at hand. They have cash and equity about 220,000, which is not a lot, but it's okay. Talking about the debt being 180, they can still pay it off. Let's check out the analysis, what they say for this year and a few coming years to come. So the average, let's take the average of them. Average EPS, earnings estimate, is for current quarter was 1.28, next quarter is 0.1, and then next for this year is 0.26, and for next year is $1 per share. Okay, not quite a big increase, but around 40% or something. Let's check the revenue estimates. Averages, okay, this quarter 200k, next it's getting less because winter is coming, and next this currently year they only made approximately 600 million, and next year they're making about almost 900 million, which is about 47.20% increase compared to this year, which is above average basically. Not every company, usually companies have 20 to 15 to 30% max raise in earnings revenue for next year. Let's check the actual GPA. Okay, actual 0.2. Last earnings was 25% more. Yeah. Let's check the growth estimates and see how much for this current quarter is 55%, next quarter 61, current year 61, and for next year is almost 60, and then for next 5 years to come per annually is 6% increase, which is, I think they're gonna make much higher percentage than this, because usually the average of S&P 500 is from 8 to 10% annually. So I definitely believe they're gonna make a higher earnings than this. And September, one analyst said strong buy and two said buy, and they have an average price tag of $42 share, which is currently at 25. If you calculate that, that's about 2x of the current price share. And everyone, yeah, UPS, City Group upgraded to buy. For me, have a look into this company, see if it's a good fit, but this one is more of a future, more longer vision of having scoot. Because think about this: when Amsterdam bans electric scooters, okay, what happens to all the scooters? We can check it now. We can check it out now. Okay, let's take an example for the Netherlands. There's approximately about 170,000 electric scooters that are driving in the Netherlands now. And before the end of the year, people are planning to buy 72,000 scooters before the end of the year, which is big number basically. So multiply 72,000 times the price of the scooter, that's basically the revenue of these bikes. And Yang has a big share of it. Okay guys, stock number 2 is going to be about Lilium, which has the ticker LILM, and it's listed on the Nasdaq. It just had a merger with Quill acquisition last Thursday, so about a week ago. Lilium is basically another company like EHang. It's a vertical takeoff and landing vehicle, and it's electric. But the main difference between EHang and Lilium is that EHang is a 2-seater for now, and Lilium currently has from 5 all the way up to 7-seater vehicles. Lilium is fully electric, so that means no zero emission or anything like that. You can fit up 6 passengers with a pilot, addition to luggage. No noise because of an electric engine, high performance, and they have approval from the EASA, which is the European Flight Committee, and FFA, which is the American Flight Committee. So basically, this company, like I told you before, in this industry, I really believe for the next few years to come, to make one of the most money opportunities out there. And there's another company which I will show you in another video, next coming video, so stay tuned with that. So Lilium basically is a German startup company which is based around more than 4 countries globally and have more than 700 employees, and they started the year of establishment was in 2015. The good thing I like about Lilium is that all the co-founders still work there as employees, and they manage the company from A to Z kind of. So the CEO, the head of structure, the VP, more like the chief officer, all of them are the co-founders, which really makes me believe in this company more and more. The currently valuation of market cap is currently at $3 billion, which is almost the double of what Hang's market cap is. And they didn't do a lot probably, or they didn't have any deals. So that makes me believe more in Hang. And these companies, they're definitely my vision. Each company is worth 10 billion market cap. And the price to books ratio is currently at 1.5, which is quite okay. EPS is currently negative because they're not making any money currently for the last few years because they just got into business. Outstanding shares, they have about 258 million shares, which I believe maybe they're definitely gonna get more and more in the future. So knowing all of that without having a lot of information about the stock is that at $10 currently, it's really cheap currently. If you think, let's calculate this, okay? Let's calculate, say if the market cap, we're gonna estimate it at $10 billion. Divided, market cap is basically the outstanding shares times the share price. That's what makes the market cap. So if we get the market price divided by the currently outstanding shares, we should get a currently stock price which is valued at $35 currently, which if we divide the $35 times the 10.85, that's a 322% increase, which I believe they're gonna hit before in the beginning of starting next year in the first quarter, as soon as they start showing deals and what kind of industries they're gonna go into and what partners they partnered up with too. So $35 share price for me for Q1 in next 6 months for 300%. If we divide it by 6 months, we get 50% each month, which is for me an incredible, absolutely one of the best deals I can make in life, you know. It's like a one-time opportunity I can find. So guys, I advise you to really invest in the stock if you have some money. What at least you can do, if you have $100, you can buy 10 shares. And then it won't make you lose anything. If you have $1,000 left on the side, you don't know what to do with it, just invest and get like 100 shares, 50 shares, and you will thank me later. So our third stock today is going to be Coinbase Global, which is basically a provider of cryptocurrencies, and they have many other services such as loaning cryptocurrencies, buying, selling cryptocurrencies, or opening a wallet on Coinbase. Today's price is at 241, and it just went public this year in around April. It started from $200 to almost all the way up to $430 with a market cap of $63 billion with a P ratio of 17.8. Price per earnings ratio, so you're paying for the price 17 times of what they're earning currently at the moment. So you're paying 17 times the price of the stock, where it should be actually. But 17 it's pretty normal because later on when it gets higher and higher and higher, probably the earnings will get higher as well, which makes the stock price and people buy in more. So which automatically makes the PA ratio even get higher, kind of, in a way. And the APS is $13, which is pretty nice. Yeah, let's check out the finance and statistics. What they have currently, market cap, like we said, this currently pH 17. Forward pH ratio is 43. 43 is quite high. Price per sales is 12, a bit high as well. Book 10, high kind of. Let's check out the okay, outstanding shares. They have 140 million shares almost. Insiders hold only about less than 2%. Okay, institution about 28%. Short interest is 3 million shares are short. They don't have any dividends currently, maybe in the future. I hope so. Profit margin more than 50%, which is good. I wouldn't say it's good, it's just decent for now. Revenue about 4.9 billion. Gross profit is 1.2 billion. Total cash at hand let's say about 4.4 billion. That's a pretty good number. Total debt is 1.8, 1.9. So they can easily pay off the debt with the cash they currently have at hand. And yeah, so far so good. Yeah, let's go check out the finances and profile as well, see who the CEOs, how many employees they have, which is 2,170 employees. Like I said before, if you want to check out the CEOs and all of the key executives, see what their character is like, how they manage, how their way of thinking is, how of leaders are they, to see if they can push the company forward or not yet. And the company is based in the USA currently. Let's check out their finance. Okay, it's not that handy to watch these tables on the phone. So if you have the time and the effort and you want to put in the effort, which I suggest to you, if you're serious, open it on your laptop or computer, PC, and have a much better detailed look. So the total revenues for almost 5 million last 12 months. Last year was about 21.4. A year ago was 500, half a million. They're basically making money. For me, why I'm choosing the stock is mainly because I really believe in the blockchain technology and kind of I wouldn't say cryptocurrency specifically, but the technology that comes from behind the blockchain, of like having a decentralized system. And like, say for example, the new projects that come out with the NFTs, all these NFTs are mined through a cryptocurrency. Most of them are Ethereum, and there's other new coming out, unicorn and pancakes and I don't know what, and all of them are kind of existing on the cryptocurrency market currently. So I really believe in the long term, the Coinbase is going to be a really profitable company. The only issue with it is if it gets hacked or if any kind of hacking happens. That's why I would suggest anyone buying cryptocurrency or something like this to store it on an off-cold wallet, or to store it on a private wallet where you have your own private key, which has either a 12 or 24 keyword, which you shouldn't share with anyone. Okay, let's continue. Cost of revenue is almost 500,000, 180K. Okay, they probably hired more employees. They beat the last earnings by $4 almost. November 4, quarter 1, missed it by 40 cents. They've been profitable starting from this year. Let's go to the analysis where see what they expect from this stock. Basically, the average earnings estimate for this year was $12. For next year is about $5.6, which I quite believe might be a bit higher than what they expect, maybe up to 12, like this year, exactly like $12. Let's check the revenue estimate, which is averagely at 6 billion for this year, and next year 6 billion, missing a bit, which is 11% decrease from last year. Because honestly, what happened with the crypto market last year and this year and the beginning of this year was quite insane. So a lot of earnings, which was unspectacular. So yeah, it could be around, I would say maybe an increase of from minus 5% all the way to plus minus 5% in revenue estimate. EPS actually okay is $6, which is an increase of 175% of the last earnings. Okay, that's pretty good. For the next 5 years per annual is 66%. That's I really like that number, you know. Next year they expect of a 55 decrease, okay. But if they expect for the next 5 years of 66% increase, I definitely see that coming from somewhere. We can check out as well the holders, see what kind of investors, who are the investors, who holds the biggest share, who can have the biggest influence on them. Biggest few banks are probably for Vanguard and Blackstone, Citadel, ARK is the biggest investor currently with 5 million shares. Second is Vanguard, which are quite expected, and few others investors now. I don't know most of them, but I just know Vanguard, Nico, ARK, and Citadel Advisory. So the fourth stock we're gonna talk about today, which is Robinhood. I'll take a HOOD, Hood. It's currently priced at $47. It just went public last year, about a few months ago. And the market cap is about almost 40 billion with a minus EPS of 8.5. That means they're not making profits or they have too many shares outstanding. Let's check out the statistics, see what they say there. Market cap, like we said, forward PA is minus 525. Oh yeah, that's quite a lot. The next 5 year expected is minus. Price per sales ratio is 23.6, which is not good at all. How many outstanding shares they have currently? 836, which of them is 445 million shares outfloating, held by almost 7.5% by insiders, 36 by institution, and probably the rest is by public. Short interest is of 21 million. It's now a big percentage of the outstanding shares. The profit margin currently is minus 116%. Operational is 11%. It just went on an IPO last year. So these numbers kind of make sense if it's a new startup company or like a new company coming into the market as an IPO. There's probably not a lot of information about it online, or the numbers are quite low because they're still getting a head start on how the operational and how they list everything and share the information with the SEC. The revenue is about 1.6 billion, which I believe in the future, because now everyone uses, especially the young traders, everyone uses Robinhood, probably mainly in the USA, but everyone who likes to invest as much as €100, $100, $50, $5 to $10, you can invest it through Robinhood, and you don't pay any commission fees, zero commission fees, which is a really good. Besides, when you go invest it with a bank, you have to pay a fee for every time buying a stock or selling a stock. So Robinhood made future investing it's like a fintech company. Now future investing is mainly with these young Generation Z and millennials who invest more, who don't have that much money, who invest in these type of companies. And the younger generation who come next and after us, they're gonna all kind of be using Robinhood. It's pretty simple to use, and they recently announced that they will open a crypto wallet as well to host cryptocurrencies. So that means there's gonna be a competition probably between the stock before it, which is Coinbase and Robinhood, and the other companies who hold this type of cryptocurrencies. There's gonna be a bit of competition about the fees and everything, but that's life in a corporational world, you know. The growth profit is 700 million out of the revenue, okay. Total cash at hand 10 billion currently. It's nice. Total debt is 7.9 billion, a bit high, but it's okay. They can still cover the debt if something happens. Let's check out their finance and profile. See how much the CEO gets if it's there. Okay, they currently employ of 2,800 employees. The CEO, Vladimir, gets 700, almost 750K, which is for a CEO is a good price to pay for him, you know. I believe that 700K is okay for a CEO and a co-founder. And as I said before, you can check out these employees by just copy pasting their name and check out their background. So click on the website and have a look how it is organized. If anything new is coming, see commission-free investing plus the tools you need to put in money in motion. Sign up for free and you can even get a free stock, which is pretty nice. Commission and free stock disclosure. They even have IPO access. And then you can just check out the website if there's anything new coming up for you. Cryptocurrencies now here. They're starting gold options. They even sell options. I didn't know that. So you can buy options on there. Gold cryptocurrencies is just coming out new. So Robinhood is a really good investment for you. Let's go back to the finance. Check out the finance if it makes sense. I found out a new trick that I can use the desktop setting and see the whole table at once. Yeah, looking much better, isn't it? So we can have a better look at the numbers and everything. Okay, the total revenue is like we said 1.6 billion. Okay, 2019. See if we see all over the years, the last few years, they've been kind of okay. Last year they doubled their position, and the year before they tripled their revenue stream, with the cost of revenue being almost the same as last year, which is pretty nice. Gross profit is getting much better. Expenses, operation expenses, okay, is getting higher, probably hiring new people, buying new equipment, renting out data centers to store all the data in. Let's check out the balance sheet to check how the cash depth, if it says anything else. We can see if it's restricted cash or it's actual cash. Okay, restricted cash is about 5 billion, and the cash at hand is 1 billion. Okay, that's pretty good. Total depth is 1.9. That's what they say here. And check out the cash flow, see if there's anything interesting going on, or operational cash flow is okay. We can, if you really wanna get into it, you can see how they're spending it and what they're spending it on to get a better idea about it. But that will be in a deeper video following up in a few weeks probably. I'm going to talk about all these things, explain them kind of one by one, what it says, what it means for different companies, because each one of these could mean a different thing for a company than a different company. So if it verifies from the industry of the company or the stock which it operates in. So if it's a real estate company, probably investing cash flow will be much higher than this, because they're investing in properties, investing in land, investing in other companies, investing in developers, compared to Robinhood. They don't have to have that many locations to operate. The thing is, they have to have more probably data centers to store all the data, so the spending will be different than another company. Same as Tesla, you can see all the spending probably be on chips, will be on storage location, on employees, and the repayments of debt is okay. They've been paying okay. Free cash flow is quite bad the last 12 months, but it's okay. They're paying off the debt. Let's check the analysis, what they say. Earnings estimate for this quarter. So basic first number is the number of analysts. So this current quarter, they have average estimate of minus 1.3. Next quarter minus 3.0. This year is going to be minus. Next year is going to be minus 0.9, which is pretty decent, up to a high estimate of 1.3. which is quite of a profitable company for the future, and it's going to start being a good company. You're going to start seeing results probably starting from next year. Revenues estimate average for this quarter was 400 million, next quarter 470 million. Current year is almost 2 billion. Next year is 2.7 billion. It's not that much higher. It's only 37% difference, which is, I think they're gonna make for next year what I see in the future coming for cryptocurrency getting higher and exploding kind of. Which means for Robinhood, if they actually activate the wallets for cryptocurrencies and everything, which means they will have a much higher participation in cryptocurrencies in their company. So that means they will have a much higher revenue, I believe, for next year. More than 3.14 high estimates, what they estimate. I believe maybe 3.5, almost 4 billion revenue. Earning history doesn't show much because it just went in the market last year. So the earnings was EPS was minus 2.16, and the estimate was minus 15, which is a 1,340% difference, which is not nice at all. But we can see of the growth estimate how much they're gonna go for next year, 98%. And for the next 5 years per annual, they're gonna go about 80%, which is basically take my money, take my money here, invest it in Robinhood. Now let's check out the holders. We see who the holders are. You can see how are the banks investing. Probably, yeah, see, I was guessing that. Biggest holder is ARK Innovation, ARK Next Generation, ARK Fintech. And they're holding the biggest shares out of all the other institutions. Fidelity, okay, it's a big institution as well. No other big institution. We can check inside the roster. We see what's the insiders holding and the date and how many shares they have. Inside the transactions, we can see what the transactions been last few months. Okay, they bought from last 6 months, they bought 35 million shares, and they sold 2.7 million shares. Net shares sold is 32 branches was 32 million. Total insider shares held is 64 million. And then you can see here who bought the shares, how much they bought, when they bought it. And it's probably as well like compensations for some people inside the company. Buy this company now. From my perspective, investing and fintech companies in the future, in the next few years, is going to change from, especially with the young generation and the people who are going to be like, for me, example, I'm Millennium, and I'm not going to go to Goldman Sachs or someone to invest for me. So I'll use it through an app or a fintech app, which could be Robinhood. And the Generation Z as well, they're used to investing their own money and seeing where the money goes and how their money not goes. So, and the generation after that, for the next probably 5 to 10 years, people are gonna use apps or fintech companies to invest their own money and make their own research, or probably maybe pay someone to make a research and then tell them invest in this stock, and then they will invest it through their own application or something like this. And as well, crypto, they have everything in one place, and you can see all the values and everything. So for me, I really believe in a fintech company, which is Robinhood, that they're gonna be really profitable for the at least next 2 to 3 years coming. You can even make more money by buying options or warrants on these companies, which I will explain what's the difference between a warrant, what's the difference between a stock option, what's between a stock itself in the next video. So stay tuned. Okay guys, our final and fifth stock is Lucid Group, ticker symbol LCID. And currently at $25. This company is basically an electric car, a competitor to Tesla, but the difference between them and Tesla is that these are more of luxury type of customer they're targeting. With a market cap of 41 billion and an EPS of minus 306. They basically just merged with the CCIv about a few months ago as well. So it's just a new startup company kind of. But they have their own factory at still producing, and I think their cars are gonna be rolling by next year or 1.5 year time. Let's check out the statistics and see car market cap of 141 billion. Price sales ratio 9,000 because they didn't sell any cars yet, logically. Outstanding shares 1.6 billion, currently 5.6 million floating. Inside as a whole about 3.8%, institution about 63%, which is a lot. That means institutions, they believe in this company-ish. Short interest 44 million out of the 1.6 million, which is nothing. It's about 2% like it says. And profit margin nothing. Operational margin is minus 21,000 because they're just now operating, and this basic operation is costing them money basically till now. Revenue is about 4.4 million. Probably they had reservations of cars and everything. Gross profit is 900k with a total debt of 175 million. Total cash 500. Okay, that's good. Currently, okay, operating cash flow minus 800 million per year, which is type of understandable. Let's go to the profile, see how many employees they have. 1,600. Okay, employees. CEO is getting about 600k, which is decent amount of money. And yeah, the CEO payments for the CEO is pretty decent. Let's check out the website, see how it looks, if they have any news about it. Okay, the Lucid Air, you can reserve it now, starting from 77,000 with 1,000 horsepower. Oh, that's a powerful car kind of, with a range of 520 miles. Okay, they have definitely different ones. Okay, I think that's the cheapest one from 77K. So basically, this luxury brand kind of for high-end customers. So not anyone is gonna buy this car. It's basically like the goals of the EV market. And then you can check here out the investors. You can check out more of the results of previous month and everything. Check out the events. Stay updated about this company. Let's check out the finances. They probably don't have that much. Okay. As I suggested, they only have 1 quarter, which was last earnings. No revenue for now. On operational costs, EPS is currently minus 0.36, basic diluted as well. Okay. Let's go to balance sheet, see the cash, what is restricted, what is currently cash. They have about 1 billion, I mean, 1 million. Okay, cash, net liabilities, current debt, total debt, net debt is 199. Okay, this company doesn't have that much in the balance sheet because it's new, but for my future expectations, it's definitely worth a look into at least and buy a few shares. Let's check out the holders to get a better insight about it. About 228 institution hold this company. Let's check the inner side, the roster. Inside transactions. No one sold, they bought more shares. But it doesn't show a lot of information about here.